The wait is over for countless investors who have followed the journeys of the Vietnamese Dong and Iraqi Dinar for years. Today, Vietnam has made a monumental announcement, confirming the final exchange rate for the Vietnamese Dong. This isn't just a rumor. It's a confirmed development that's already sparking a ripple effect in markets and banking circles worldwide. We'll be breaking down the official numbers, analyzing the reactions from international finance, and exploring what this means for the Iraqi dinar. Most importantly, we'll discuss the steps observers can take to stay informed in this new financial era. For months, financial outlets around the globe have been anticipating this very moment, and today their predictions have been confirmed. Vietnam's government has officially announced the revalued exchange rate for its national currency, the Vietnamese Dong VND. This move is being hailed as one of Southeast Asia's most significant financial developments in decades, with profound implications for international markets, global investors, and Vietnam's domestic economy. This decision was a collaborative effort involving the State Bank of Vietnam, the International Monetary Fund, IMF, and a consortium of banking partners spanning multiple continents. The revaluation was driven by a desire to both stabilize Vietnam's internal economy and integrate the VND more fully into the global financial system, at a rate that reflects its real value and the country's growing economic prominence. Analysts point out that this revaluation is a reflection of a complex history, including past currency suppression and regulatory limitations. For a long time, the dong was widely considered to be undervalued, held back by a combination of historical factors, geopolitical influences, and outdated financial frameworks that restricted its flexibility. The government's decision to pursue a revaluation demonstrates a strong sense of confidence in Vietnam's economic trajectory and a clear intention to position the dong as a globally competitive currency. By taking this step, Vietnam is not simply changing a number on a balance sheet. It is sending a powerful message to international markets, trading partners, and foreign observers that the country is prepared to operate by global financial rules. The details of the announcement have already caused a stir in financial markets worldwide. While initial figures varied slightly, a consensus has quickly emerged regarding the revalued exchange rate. The Vietnamese dong has been officially set at a rate ranging between $3.65 and $4 US$25 per 1 VND, a change that even seasoned analysts are describing as extraordinary. This adjustment represents a dramatic increase in value, transforming a currency once considered relatively obscure into a significant player on the global stage. For individuals who hold the dong, this adjustment is significant, as it has substantially increased the value of their assets, potentially creating new opportunities for financial diversification and security beyond individual fortunes. The revaluation has broad implications for international trade, foreign exchange markets, and regional economic stability. Experts suggest this move reflects Vietnam's broader economic evolution, driven by its successful manufacturing sector, expanding trade partnerships across Asia and Europe, and a digital economy that has accelerated financial sophistication throughout the country. This isn't just speculation. It's a confirmed development, published and acknowledged by credible news outlets, financial institutions, and governmental sources. By formally establishing this rate, Vietnam is signaling a new era in which the dong can function as a legitimate, internationally recognized currency, potentially reshaping investor confidence and altering the balance of economic power in Southeast Asia and beyond. Many observers and analysts are questioning the timing of this decision. Why did Vietnam choose this specific moment to declare the final revalued rate for the dong? The timing was not random. It was the result of a careful balance between domestic economic readiness, regional competition, and global market positioning. At the heart of this decision were three interconnected forces that together created the ideal environment for a revaluation. The first is a global economic alignment. Over the past decade, Vietnam has strategically positioned itself as a key partner to some of the world's largest economies, including the United States, China, and major European trading nations. By stabilizing the dong at a competitive rate, Vietnam ensures its currency is both credible and attractive for international trade and investment. The second factor driving the timing is investor confidence. Vietnam has attracted billions of dollars in foreign direct investment into its manufacturing hubs, technology parks, and real estate. A revalued currency signals to investors that Vietnam is committed to operating at international standards, strengthening its regulatory frameworks, and providing a predictable environment for capital deployment. This move reassures foreign investors and helps to sustain the flow of capital into the country. It demonstrates a commitment to transparency and a stable financial environment, which are crucial for attracting long-term, strategic investments from multinational corporations. The government's action solidifies its reputation as a reliable and serious player in the global economy, further bolstering the confidence of those looking to invest in its growing sectors. Thirdly, regional competition cannot be overlooked. Neighboring economies like Thailand, Singapore, and Malaysia have long benefited from stronger, globally recognized currencies that attract foreign capital and trade partnerships. For Vietnam to maintain its competitive edge, attract multinational corporations, and accelerate economic modernization, a revaluation became not just beneficial, but inevitable. The government understood that in a highly competitive regional landscape, a strong, stable currency is a key asset. The revaluation helps Vietnam compete on a level playing field, attracting the kind of foreign investment and trade that will fuel its next stage of economic growth. The timing of Vietnam's decision was meticulously calculated, reflecting both domestic strength and an international strategic position. The announcement is more than a monetary adjustment. It represents a bold statement of Vietnam's intent to compete on a global scale, signaling a readiness to transition from a historically undervalued economy to a recognized financial power. This shift is a testament to the country's economic progress and its strategic vision. It is a clear signal that Vietnam is ready to shed its past and step into a new role as a significant player in the global financial system. The revaluation marks a new chapter not just for the Dong, but for Vietnam's place in the world. The ripples from the Dong revaluation are not confined to Southeast Asia. They are being felt across emerging markets worldwide, with particularly intriguing implications for the Iraqi dinar. When a major emerging market currency undergoes a revaluation, it often triggers a domino effect because global financial ecosystems are deeply interconnected. Investors, traders, and central banks closely monitor these shifts, comparing economic trajectories, monetary policies, and potential gains across different countries. In this context, Vietnam's announcement immediately raises questions about the readiness of Iraq's central bank and government to finalize their own revaluation strategy. Analysts emphasize that the spotlight on the Dong creates both pressure and opportunity for Iraq. The pressure stems from the fact that Iraq cannot afford to appear stagnant in the eyes of global investors. The opportunity lies in the fact that a well-timed revaluation could unlock new capital inflows, strengthen the economy, and improve international confidence. Market observers note that Iraq's financial authorities are keenly aware of this dynamic. The comparison is inevitable and delays could result in missed opportunities. Experts are increasingly predicting that, with Vietnam leading the way, Iraq's timeline for revaluation could accelerate significantly. The anticipation is palpable among those who follow the Iraqi dinar, as the precedent set by the Dong provides both a benchmark and a sense of urgency. In essence, Vietnam's strategic move has not only reshaped Southeast Asian markets but has also reignited discussion and strategic planning in other emerging economies. For those tracking the Iraqi dinar, the message is clear: the momentum is building, and conditions are aligning, suggesting that a revaluation may be approaching. This interconnected financial ripple demonstrates the far-reaching impact of a single, well-calculated currency adjustment in today's globalized economy. It underscores how a move in one part of the world can have significant consequences for financial ecosystems everywhere, highlighting the importance of staying informed and vigilant. In the wake of Vietnam's historic Dong revaluation, financial analysts and policy experts have been sharing their interpretations of what this means for global currency markets and emerging economies. We've compiled insights from three leading figures whose expertise spans currency strategy, Middle Eastern banking, and international financial policy. Dr. L. Anderson, a renowned currency strategist based in London, emphasized the broader implications for those tracking the Iraqi dinar. According to Dr. Anderson, Vietnam's move validates years of speculation, stating that it is the signal dinar observers have been waiting for and that the regional domino effect is real. His point underscores the idea that currency markets are interconnected and that a significant adjustment in one currency often triggers a reevaluation in others. Meanwhile, Al-Nafi, a Middle East banking consultant, highlighted the urgency facing the Central Bank of Iraq, CBI. Al-Nafi noted, Iraq cannot remain in limbo. If they want to retain credibility and attract foreign direct investment, they must release their revalued rates soon. The Dong announcement is a catalyst. In other words, the Dong has effectively set a benchmark. Global observers now have a comparative framework to evaluate Iraq's monetary readiness. This puts pressure on the CBI to act, as delays could be seen as a sign of economic instability or a lack of commitment to global financial standards. The eyes of the financial world are now on Baghdad, waiting for the next move. Finally, Harris, a former IMF policy advisor, contextualized the event within a larger economic narrative. Harris stated, "This is not just about currency. It's about global financial restructuring. The Dong and Dinar are central players in a broader shift. Taken together, these expert insights reveal a multi-layered reality. Vietnam's Dong revaluation is simultaneously a domestic economic milestone, a regional financial trigger, and a key piece in the evolving global currency landscape. It validates speculation, pressures neighboring economies, and signals the beginning of what many analysts believe will be a series of strategic adjustments across emerging market currencies, worldwide. For observers, both individual and institutional, the implications of Vietnam's revaluation are significant. For those who hold Vietnamese Dong, this moment marks a milestone where years of following the currency's journey can translate into tangible outcomes. A modest holding that may have seemed insignificant is now substantially increased in value, demonstrating the tangible benefits of strategic observation and patience. However, experts caution that while the potential is notable, staying informed is key. Those following these events must be aware of banking schedules and regulatory guidance to ensure that they are prepared to act if needed. For those tracking the Iraqi Dinar, the situation requires a different approach. Patience is still important. Vietnam's announcement has effectively opened the door, providing clarity and setting a precedent for Iraq's central bank to follow. The path for Iraq is now more visible than ever, and those who follow the dinar are advised to monitor developments closely, ensuring they are positioned to act thoughtfully once an official revaluation is declared. Key takeaways for all are to stay consistently updated on official announcements and to remain vigilant against scams by only engaging with credible institutions. These developments highlight a broader lesson in global finance. Market shifts, policy decisions, and currency adjustments are interconnected. A move in one country can trigger a cascade of opportunities and challenges across multiple economies. Those who combine vigilance, patience, and strategic planning are the ones most likely to be in a good position as this new financial era unfolds. The announcement of Vietnam's Dong revaluation has ignited immediate and intense reactions across financial markets worldwide, drawing attention not only from regional observers but also from major global economic players. Leading news networks across Asia, Europe, and North America have been featuring headlines about the event, underscoring its unprecedented nature. In Asia, stock markets experienced a surge driven by optimism, reflecting a belief that Vietnam's strengthened currency will enhance both trade efficiency and profitability. Analysts note that financial forums, online trading platforms, and institutional investor networks are abuzz with discussions about liquidity flows, portfolio adjustments, and capital allocation. In the United States and Europe, observer interest has reached a high point as financial institutions quietly prepare for potential increases in transactions and exchanges, anticipating the ripple effect this revaluation could have on other emerging market currencies, including the Iraqi dinar. Economists and traders alike emphasize that this is not a localized or short-lived development. It is a milestone event with far-reaching consequences affecting currency stability, trade relationships, and global investment strategy. Observers are particularly focused on how sovereign wealth funds, multinational corporations, and hedge funds will adjust their positions in response to the Dong's new valuation, potentially setting off a cascade of financial activity that could reshape emerging market investment patterns for months, if not years. The headlines and market reactions together illustrate that Vietnam's announcement has transcended domestic financial policy to become a globally watched event, confirming the interconnectedness of today's financial ecosystem and highlighting the stakes involved in currency reevaluations for both observers and national economies. While analysts and media outlets focus on charts and projections, the real story of a currency revaluation is about the people whose lives are directly impacted. Behind the headlines are countless individuals who have patiently followed the Vietnamese Dong and Iraqi Dinar for years, hoping for a moment like this. Their experiences put a human face on what might otherwise seem like abstract numbers. One retired teacher shared that she had purchased a small amount of Dong, a modest sum at the time. Today, she explained that it had grown in value, providing a sense of financial freedom she never imagined possible. Similarly, a military veteran recounted, "We always believed in Iraq and Vietnam. Today that belief paid off. It feels like validation for years of patience and trust." These personal accounts underscore a powerful truth. Currency reevaluations are more than macroeconomic events. They are transformative experiences for ordinary people who observe financial markets with faith, discipline, and hope. Economists often emphasize statistics and predictive models, but the real measure of impact is reflected in lives changed and long-term financial security achieved. These stories also highlight a lesson for future observers. Patience, strategic planning, and trust in credible financial systems can yield extraordinary rewards, turning years of modest observation into significant outcomes. In the context of the Vietnamese Dong and Iraqi Dinar, these human narratives provide a tangible, relatable dimension to a financial phenomenon that is otherwise dominated by numbers and speculation, reminding us that behind every revaluation is a story of hope and perseverance. With Vietnam's Dong officially revalued, global attention is now squarely on the next potential domino. The announcement has already set off ripples in markets across Asia, the Middle East, and Western financial hubs. And the question on everyone's mind is clear: when will Iraq follow suit with its own revaluation of the dinar? Industry insiders, analysts, and financial observers suggest that the window for Iraq to act is narrowing rapidly. With Vietnam setting a new benchmark for emerging market currencies, remaining silent could create both economic and reputational risks for Iraq. Those who follow these events worldwide are now watching closely, comparing the conditions, timing, and potential financial impact. Many experts believe that the Central Bank of Iraq, CBI, may be compelled to release its official revalued rate in the near future. For those tracking these events, this period of anticipation is a critical time to remain informed, vigilant, and strategic. Understanding timelines, following credible banking announcements, and being prepared for potential exchanges are essential steps in ensuring that opportunities are maximized while minimizing exposure to unnecessary risk. The momentum generated by Vietnam's announcement has created an environment where action is imminent. From a macroeconomic perspective, Iraq's potential revaluation would not just be a local development. It would be another milestone with regional and global implications. It is important to emphasize a set of disclaimers and safety warnings. This discussion is for informational purposes only. It is not and should never be construed as direct financial advice or guidance for buying, selling, or exchanging currencies. Currency revaluation, especially in emerging markets, is inherently complex and carries significant risks. Observers should always consult with licensed professionals before making any monetary decisions. Additionally, periods of high excitement and market movement often attract opportunistic individuals seeking to exploit confusion. These individuals may present themselves as insiders or offer guaranteed returns, but engaging with such schemes can result in substantial loss. Staying informed through credible, verified institutions is critical for both safety and success. It is equally important to document holdings, monitor official banking announcements, and approach any opportunity with careful analysis and a long-term perspective. Ultimately, while the potential for financial gain during a currency revaluation is a topic of interest, so too are the risks. Informed, cautious, and patient observers are those most likely to navigate these developments successfully. Balancing excitement with prudence ensures that opportunities are not only noticed but are realized safely, ethically, and strategically, protecting both financial well-being and personal security in a fast-moving, globally interconnected market. The journey is far from over. It has only just begun, and those who remain vigilant, ready, and informed will be the ones who fully embrace the opportunities ahead.